Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. It was another bearish night for many of the markets as the dollar index, which measures the greenback strength against the basket of six major currencies, still remains near the 20-year highs around 109.60. A mixed bag of US economic data led to a better than expected retail sales, which has possibly cemented the likelihood of another 75 base point rate hike next week when the US Fed comes to the conclusion of its monetary policy meeting. The US retail sales rose unexpectedly last month to 0.3% in August, the US Commerce Department said, following a decline of negative 0.4% in the prior month. In addition, the number of Americans filing for new claims for unemployment benefits decreased to its lowest level over 3 months. That is by 218,000 to 213,000 last week. In light of that, the market has remained somewhat heavy since the US inflation figures come out earlier in the week. That sent the market tumbling heavily, and now looking at the Australian dollar, it's threatening the downside potential of increasing if we take the break of 66.80, as this would expose the region of 64-cent area. Well, the technicals also heavy, does give a little upside potential at this stage. So no doubt into today's session we will see possibly further tests on this support level of 66.80. Along with that, we do have Governor RBA speaking later this morning. The euro has held respectably compared to some of the other markets, as it holds above the level of 98.8085. In light of the pattern, I still feel there is potential for a further gain, and that is seeing a rise up towards the region of 10015 to 1008090, and if so, with a downtrend, seeing just around that region of 101 figure 50 area. The dollar yen still pressuring this trend line, which is seen somewhere, I believe, around 143. In light of the technical pattern, it does still apparently remain heavy, and therefore could see further risk on that support. And if we do see a break somewhere around, I believe, 142.75 to be more exact, I feel there is a potential slide to 141.0515, and with the base holding at 139.5. As we can see, the market has way extended itself over the last month or two, and therefore does warrant this pullback. The sterling is a little bit heavier into Friday's session, having failed to take out the level of 115.85, still remains somewhat to the downside of 111 to 113 as a potential target. We do need to see the break to the upside to confirm a bullish case, otherwise the bears will continue to weigh on the support until reaching their objectives. Well, the level of 1,680 has been crushed overnight and now exposes the next region of 1,635 to 42. The bears are still weighing heavily with the trend coming with the ADX. I feel there is little upside potential in the next 24 hours, and therefore could see further risk, as I mentioned, to the downside. And looking at the broader aspect, we lower this now. This is where I feel the market's going to be heading, and we're getting a little bit oversold, so we may see a little bit of profit taking as we take the slide towards that region. Having failed to take out that topside level around 88.40.50 area, the market has taken a tumble overnight and now poses a further threat after it took out the support level of 85.60 to take the challenge lower to $81 a barrel. Technically, the market is remaining somewhat heavy, so I feel we are in for a bearish ride, and that will take us to that bottom side and reassess as profit taking did emerge back from that level. Well, that wraps it for the morning. Thank you very much for joining me, but please join me later for the end of the day wrap.